Hello, everyone, and welcome back to the Token City Show. Today we have with us Marius Jurgilas, who is the co-founder and CEO of Axiology, a company very much similar to Token City, operating in the tokenized asset space. Welcome, Marius.
Hello. Thank you for having me.
It's a pleasure. We're very happy to have you here. I would like for you to start a little bit with your personal experience in the finance space. You were a central banker in Latvia, the country where you originate from. You also were in the Bank of England, if I remember correctly. You were a researcher in the European Central Bank, and you have like a very strong academic background in law and economics. So it's always interesting and fun and inspiring when someone with the type of career that you have had ends up in the trenches, so to speak, building products, and on the other side of the let's say battle with your former colleagues in terms of, a business is really different from a central bank, and the rhythms and so on are very different. So I would love for you to explain your experience, your initial experience in the financial sector, and how that shaped your decision to say, okay, I'm going to go and build something from the ground up.
Mm-hmm. Yeah, so again, thank you for having me. I'm not sure how far I should go with my experience, but probably the most relevant one started even outside of Europe, where I was doing my doctor's degree in money markets. And that was probably the first touch I got with reality of how things are actually working in financial markets. And you already mentioned Bank of England and Norges Bank, Norwegian Central Bank, working on financial stability issues, how the contagion spreads through systemically important institutions. Then finally, I served for 10 years at the Bank of Lithuania, where I was a board member in charge of capital markets, payments, research, and finally financial supervision. So I wouldn't classify it as, the battle and some being on one side and others being on the other side. Although I can understand and appreciate why others might think so. It's just that, in society, we serve different functions. Those are creating, sometimes, there's risk taking. And, if you take risk in your bedroom, that's okay. But if you take risk with someone else's money, maybe you need someone to be looking over your shoulder. So I think it's fair.
No, completely, I understand. Yeah, but like you said, I was referring to the fact that when you're building something, you are surviving at the initial stages, right? And sometimes, like you said, of course, there's someone who has to be, taking care of the fact that funds by investors and transactions must be secure and everything else. I was just referring to the fact that sometimes regulators have a hard time, in my personal view, adapting their timings and how fast they can go sometimes, related to the realities of the business experience, building businesses and so on. I am still curious, what was that led you to, coming from a credentialed institutional background, to go into the, I was using the battle image of going and saying, okay, I'm going to build something. What motivated you?
Then I was a public servant, and being a supervisor, those guys that are supposed to be moving slow and take very much measured decisions. I quickly realized that in the jurisdiction that I was in charge of, which is Lithuania, somewhere on the edge of Europe, right there, even though we are part of the European Union, we are part of the Eurozone, Euro is our currency, the depth of capital markets is not exactly what we actually wanted. And something which might not be a widely shared understanding across other European member states, these smaller countries sometimes have different objectives. So, let's say I'll use a different country. Let's say Germany, right? In Germany, they have 1,000+ banks. We in the Nordics or the Baltics, we have highly concentrated capital market, a few market players having operations in kind of oligopolistic structure. So incentives to have new market players coming in and disrupting, in a good sense, disrupting the market and bringing innovations is very high. So the supervisory approach has to be instilling innovation, responsible risk-taking, because otherwise you will be just sitting in the backwaters and at the jeopardy of some big banking groups having some subsidiary activity in your jurisdiction. So that was the motivation for me, which formed me and my understanding of how financial market is evolving. And I also was like everyone else, probably in the supervisory world, taken by surprise by the enormous growth now, let's say almost 10 years ago, by the crypto industry, things like ICOs and NFTs. And I didn't dismiss it fully as complete crypto bullshit, because the idea seemed an interesting one, but maybe applications were not exactly the right ones. And now, as you said, on the other side, implementing that technology for the better functioning of capital markets.
Understood. Okay. On that note, let's set a little bit of context. We try to be as pedagogic as possible because we understand that a lot of the audience that listens to us would like to better understand sometimes the terminology that we use. So please try to keep that in mind while we continue the conversation. I just referenced that because I was going to mention the pilot regime. So instead of just going straight into it, let's just set a bit of context. The European Commission in 2015 saw that you could have programmability in blockchains through Ethereum. They started thinking about what this could entail. Eventually, one of the things that came out of that process was the DLT pilot regime. Basically, we can use blockchain for short. Blockchain is a form of DLT, but let's use blockchain. I think it's complicated enough for the general public, maybe. That DLT pilot regime is so called because it's a sort of a testing ground for institutions like or companies like Axiology and Tokenicity to be able to launch and run tokenized exchanges for digital securities, blockchain securities, real-world assets. It's been called different things along the way. Basically, regulated financial instruments, for example, funds, positions in funds, equity, and debt, right? And Axiology is one of the first to have obtained this license in the EU. And I would like for you to explain when you got that license, what Axiology is proposing to the general investment public, to its partners, its strategy, and so on.
Okay, so I will take your suggestion and try to explain it in the most simple way. So first I need to have like the the prerequisites, right? The normal people, their touch with capital market is, I have some money, I want to invest in some things, financial instruments. I know there are equities, bonds, and you mentioned fund units. I have no idea what that is, but probably sounds something better than just individual items, right? So these are the categories. But we, normal people, cannot go on a just capital market. There is no marketplace where we can just show up and say, hey, who can take my money? It's a regulated market. And that regulated market has gates. And to go through the gate, you need to be onboarded. You have an account or a wallet if you are coming into it from a tokenized way. With some financial institution. And that financial institution is what we usually call broker-dealer or your bank or asset manager. So these are the institutions that are gatekeeping the marketplace. And the marketplace is a place where people exchange money to financial instruments. And the financial instruments are being issued by those who are in need of money. Companies, startups, governments, yes? Now, the functioning of capital market requires exchange of money. Moving away from physical cash into where the money mostly lives right now, that money is with a bank usually. And then bank maintains a ledger, and not called distributed ledger, but a ledger of who owns what. And that's the banking system. What type of securities are issued are being kept in some other register. Usually these are called central securities depositories. The marketplace usually is organized on a trading venue, some exchange, New York Stock Exchange, London Exchange, Deutsche Börse, Nasdaq, right? The names that everyone recognizes. And that's the way the capital market functions right now. And European Union said, why do we have so many exchanges, so many institutions who are keeping the records of shares and funds and bonds in Spain, Portugal, Lithuania? We are a single market, right? But unlike United States, where there is one company which holds the record of who owns what, so-called DTCC, and primarily a couple major exchanges, we have, I'm not going to say the exact number, like many, many institutions, very nationalistic markets, and fully fragmented market. So this DLT pilot regime is a leap of faith that European legislators and European Commission said, there is this technology which is working in crypto, the most unlikely way, where people are exchanging stuff for good or bad, but they're actually doing it across borders, across oceans, across different legal frameworks. Can we do it for the better good of capital market in Europe? And what Axiology got is a license to go into this regulated market, to cut across all of these regulated activities, keeping money, providing settlement, organizing exchange, price discovery, what's the price for that security, and actually implementing those transactions. So this license is a fully vertically integrated business model of a broker-dealer, trading venue, securities register, and settlement.
Understood that. It's funny because it's basically the description of Token City. Our companies are very, very similar, and in that sense, I wanted to.
Well, we have to be similar. We have to be similar because capital market has certain functions, and if you are working in capital markets, you are providing exactly the same functions.
Exactly, but I think there's something there. Our focus is the productive economy, so to speak, the real economy, not necessarily, the large public companies and so on facilitate liquidity to an already liquid product, but that people actually are demanding that. When I say people, I mean retail investors and so on. Your company and my company, Tokenización and Axiology, the focus is funding companies that are lower in capital volume, so to speak, in their value, but that are like in Spanish we have an expression that is is called productive tissue. I don't think that is an expression in English, but it's basically the focus of your company and my and my company. I was wondering, what led you to have that specific focus?
Mm-hmm. Many things, but in the interest of time, I'll just compress it to maybe 2 or 3. First, the biggest funding gap in Europe, and I believe in Spain as well as in Northern or Eastern Europe, is small and medium enterprises. And there are good reasons for that, because small and medium enterprises are the ones that, 1 in 5 die within 1 year.
Yep.
Business failure, nothing wrong. It's not like fraud or something, because, that's the way it is. Small businesses have they're very vibrant in terms of adapting, but also very vibrant in terms of being out of business. And that's the reason why majority of them are at the jeopardy of so-called bank credit, the ability to fund their business by, finding resources by applying for a loan.
Mm-hmm.
And in those markets where the banking industry is not really efficient, I gave an example at the beginning of our conversation where, there's a market power of a banking structure, or let's say you don't have good credit registers, or the bankruptcy process is not very efficient. There are good reasons why banks, when they provide the loans, they say it will cost you. Or you need to provide the collateral, which usually small companies don't have. So the owners or the CEOs of the smaller companies are saying, how can I do business? Why these other big institutions look at them? They go and they list their equity on stock exchange. They list their corporate bonds, and they source investors from across not only their local city or region, but across Europe or even across the globe. Why I cannot do that? So I believe that this is the biggest, the most lucrative, and the most capital market efficiency improving problem that can be attacked. That's the reason why we're going after that. I believe you and us. Even if we do our best, maybe we'll not fully resolve it, but we need to go into that direction. And the latest innovations in this space are actually showing that that is feasible. So to mention, crowdfunding, or ability for smaller companies to tap into retail investor base, those who believe and understand the business model. So that's the reason why I believe that SME capital market is the lowest hanging fruit that we should attack.
Understood. Yes, we were speaking earlier with a client of ours. It's kind of striking, mentioning what going into what you were mentioning, the fact that we can now enable companies to, for example, in Spain, the crowdfunding law, a company can have a crowdfunding license and build a good investment services, so to speak, platform off of that. But it's different when actually you have the ability for companies to have that crowdfunding functionality with the added benefits of blockchain technology and the ability, the capacity, at least under the Spanish regulation, to disinvest, right? You need capital. You can sell your investment quickly to another who is interested in accruing their more investment in a position in an asset. So it's really in that way fantastic, because as you were saying, it's true. The banks have good reasons many times to be stringent with how they provide capital, but the need to get funding is there and the appetite is there. I mean, we have a few clients who, whenever they issue a new operation, in minutes, there's people investing. In hours, the operations is closed. Granted, it's not huge operations, but after another, it all adds up. But you can tell that the appetite is there. We are talking in this case, for example, in real estate in Spain, which is very attractive right now, which provides the ability to provide a good return on investment to the operators, to those involved in the operation, and to the investors. So, yep, very interesting in that regard. And I wanted to ask you about your focus on brokers and neo-brokers. What do I mean by that? So to explain for the audience, you have investment products that you publicize, so to speak, in your platform, but those assets need distribution, right? Need a way to be. Yep. Go ahead.
Yeah. Any marketplace requires sellers and buyers. If it is a marketplace with only sellers, it's not a marketplace. It's a show. If these are only buyers, I don't know how to call that. But,
yeah, that's what we mean by distribution. Distribution means buyers.
Exactly.
Right? Sellers.
And the friction is the product, which is not fully observable, because any company has a risk, be it real estate development or alternative energy, a startup, or not a company, an entity like a government. So financial market entails a risk, and with even the best observation or monitoring technology, there's still some residual risk. How much of that residual risk an individual or an entity wants to take defines, are you a buyer for that product or not a buyer for that product? And like in any marketplace, there are products that have different specificities of risk reward, and buyers or investors who have different risk preferences. And this DLT technology or ability to have better observability of what are the previous actions of that company or that financial instrument allow better discoverability of those instruments. And not only that, they allow those institutions who are the gatekeepers, I mentioned at the very beginning, the broker-dealers, neo-brokers, who are serving retail investors to connect their investor base to asset originators or companies who are looking for funding across Europe. So this is, I guess, what we mean. What's the role of neo-brokers? The reason is that neo-brokers or neo-banks are the ones that are really pushing the so-called traditional finance or older banks to be more nimble, right? And they do that by providing better user experience to either younger generation or just, in general, better customer base. And by doing that, the neo-banks and neo-brokers really have amassed lots of users across Europe. And right now, majority of neo-brokers, I'm not going to mention specific names, not to be specific about any of them, they're right now actually the ones that are operating across many countries across Europe. So if you're a company and you're looking for investors across Europe and not only in Lithuania or in Spain, a neo-broker is a place where you can place your products much better, attract better diversified investors who might find your particular company a good fit from risk-reward profile.
Exactly. I was just really asking because, I mean, like I said, the similarities between our companies are striking. It's basically only geographical distance, so to speak, that differentiates us. But other than that, we actually went a little bit over the time we had allocated. I wish we would have had more time to continue the discussion. I thank you for being here with us. It's been a pleasure. And at some point, whenever there's more to discuss between us, I hope you will come back.
Absolutely. Thank you for having me, and good luck to you in Spain. And maybe we can connect investors and originators across Europe.
Absolutely. We are all for that. Thank you again. Take care. Until next time. Thank you. Bye-bye.
Bye.